going to sell USDT, sell gold. That's how it is, understand? Let's not blame each other. That's the problem. You understand? The next thing you have to be blamed. And Mzuzu, you blown as well. So that's how it is, guys. That's my expectation. I'm not a seller, but today I see that the market might sell. Sell USDT, sell Nasdaq, sell gold. CPI 1430. They ain't forced to take the trade. They ain't really forced. But like I said, sell USDT, sell gold, sell Nasdaq. Yesterday I said buy USDT, buy gold, buy Nasdaq. People be busy saying sells and then they sold. It chowed them. That's fine, you know. You see whatever you see. No one can judge what you see, understand? But at the end of the day, man, the choice is yours, whether direction you want to take. Me, what I'm going to take, it sells. I'm already inside sales, you know. I wish I can actually like go to my chart and show you why did I actually take the sell, understand? Hey, why not? Alex. Let me actually show you guys why I took So for me, I have this area. You see this area there? It's actually like a...
Here's the latest. Less than 1 hour away from a crucial inflation report, the first of 3 key economic data points that'll set the stage for the Fed's next rate decision on September 18th. Charles Evans, former Chicago Fed president, I'm so pleased to say, joining us now. Charles, thank you so much for being here. I want to start with really the debate that we've...
So if you can check here, we have like a neckline.
Is the Fed behind the curve or ahead of the curve if they cut rates in September?
Is in an okay place right now. I think that they have spent a lot of their time indicating that they need confidence in inflation, and I think that's a stiff performance bar. I think back
so if you can check here, we have like a beautiful neckline here.
Many rate cuts were ahead, and then the inflation.
So technically, it gives me a sell. Fundamentally, it gives me a sell.
The last press conference, Jay Powell indicated that inflation progress was welcome, and you know everybody's expecting a better number this morning. So I think they're in a position where they can respond to the improving inflation data and you know the normalization in the labor market and a bit of nervousness with the fact that unemployment has gone up. But I think it is time for them to.
So you see here,
really start talking
this is my selling area.
And actually act.
You know, Charles, you have the luxury right now of not actually having to represent.
That's my selling area. On YouTube, I did analyze here. We entered here. We are actually on profit now.
Pretty much full confidence that the Fed is going to cut at least 3 times, probably 4 times this year. 100 basis points of rate.
We'll just see, gents. We'll just see what the market has for us.
There is no sign that they should be cutting rates given the fact.
How do you want to watch news, guys? I think it's 600 here. You have to be really strong to subscribe. It's actually 6 clips, guys. 6 clips straight. So me, I pay, and sometimes I don't watch them, but 6 clips are here to watch the news. I only come when like now and whatever, I understand. So here you get the whole thing fundamentally, and I don't know about technically, but you know most is fundamentals, but it can affect technicals as well. So here, guys, it's my selling area. This is where I'm gonna take my sales. Took them here. Currently I'm in side trades.
Jay Powell has said that the labor market is normalizing.
Understand?
Seem to have more confidence that the labor market is only normalizing and not doing worse than that, even though the unemployment rate is
you mean which one is behind now? This one or this one? What are you talking about?
It is increased by substantially, and the unemployment.
So guys, we're going to sell gold, sell USDT, sell Nasdaq. Hey, but Nasdaq, the way it broke this level, it refusing Baba to come back nyana here. But sometimes let's check the area of the market where it is. Yeah, Nasdaq, it's kind of like a buy technically, but I don't know fundamentally.
And at least from the more hawkish members, Bowman,
You might think it's behind, you didn't pay.
more evidence. Charles, you take this view that your fellow peers that they aren't guiding well.
Let's check, shall we?
Guiding better. What would
This one's sell.
FOMC at this moment?
We're selling gold, gents.
Well, I think so. The Fed is really relying on this rhetoric that they're not about to cut rates until
Selling gold.
confidence that inflation.
Guys, don't forget, guys, we're trading with
sustainably to 2%. The Fed
space
doesn't
markets.
have a lot of experience with maintaining sustainable
That's what we're trading with, guys.
inflation. We kept inflation under
Yeah.
2% at 1 3/4 for a number
Understand.
of years. If that's the definition of sustainable, then I can understand why.
The best account I can recommend, guys, is
To be confident, but I don't
Sniper
think that's
account.
what they really mean, or they should mean. And I think that the increase
on gold, guys, is a sell. Yo.
has got to make you a little bit nervous. At 5.3%, the Fed doesn't have a lot of history of being able to. They don't have any history of being able to cut the funds rate at a measured pace in these 25 basis point increments on a
Gold,
quarterly
sell.
basis at the SEP.
Let's check Euro USD. No, Euro USD can be something that can give you guys a proper direction.
January 2001, where all of a sudden they realized they needed to be nimble and cut by.
You know, at the same time, I have to be listening.
Weeks. And January,
I have to get the
where,
direction,
we cut
like,
by 125 basis points in the course
it's
of,
kind of like
2
hard.
weeks, as well. And so I think it's just risk management that you.
I need this
step
touch
off
here.
Of this really quite restrictive 5.3% stance, and as nimbly as possible communicate that this is just sort of a readjustment, and you've still got your eyes on getting inflation down. It's just you don't need as much restrictiveness as they have in place now.
Well, one of the kind of criticisms that's lobbed at the current FOMC is this idea of recency bias, that they were behind when it came to try and combat inflation on the way up. So that sort of scars from that moment means that they don't cut as soon. Charles, you've been in the room where these decisions have been made. Do you think there's any credence to that argument?
I think that, one part people often say, you need to be humble. The Fed needs to be humble. There's a lot of uncertainty out there.
But USDT, guys, confirmed. You see, we are already moving this side.
The way that you thought they did. And so
Beautiful.
inflation went up to 7% on the PCE. And I was part of this in the committee, and I was saying this looks like it's transitory. It's not going to last. It's not. It was persistent. It was very persistent, but it has come down.
So let me show you something. Ne? This is what they actually took out there. Ne?
Normally would have been
The cons and previous. I think that one is the one that actually gives the best direction in the market.
2.5% on the PCE, core PCE. That's remarkable, and
It's
it's
coming in.
because of an unwinding of the supply factors. And so I think that it is difficult to look past the fact that they.
Yeah, there's something that they took out there. I want this one. So if you can see the previous, it's smaller than the cons. So which means it's a sell. If they are equal, buy. If this one is bigger than this one, buy as well. Simple. I don't know if you saw that, but that was my secret, guys. Let's go. This one's the percentage. They did take them out there.
I think that's very aggressive, but that seems to be what they're thinking about. I'm not in the room with them, and I'm trying to understand from their communications what they really mean by the sustainable 2%.
And then sometimes all you can do is you can just search about gold.
Former Chicago Fed president, thank you. We will try to get some of that clarified.
Check the statistics, what's going on.
Coming up in the next hour, Gargi Chowdhury of BlackRock, David Kelly of JP Morgan, and Stephen Rashuda.
Imagine the news that side, they dropped them around 8, half past 8. This side, it will be half past 2, like they're actually behind you.
Markets that are really attenuated to this idea that the Fed can cut
Wait,
rates.
what is this now?
Certainly with that PPI, if not from the weak labor market, 200 basis points worth of cuts priced in for the next year. What happens if the number's hot in just a few moments' time? The reason why
I want to show you something. News.
right now, given the fact that the market is pretty much unchanged, where you do see.
You see what time do they drop it?
As people anticipate, regardless
Check
of
there.
this is a Federal Reserve that's going to cut rates.
It's crazy. This side is half past 2. There's something that we want to see here. This is the latest news. Come.
Quicker, easier, and way better price.
You do the reading. Obviously, you know English, guys. You even know English better than me. So you go there, you read. To understand, you read everything. You read everything. Then you'll be fine. So yeah. Does the time affect times? No, times they don't affect times. How can they affect times? That's insane. It's not like that. They don't affect no time. No time will affect time. So guys, I'm gonna sell USDT, sell Nasdaq, sell gold. And if you want Bloomberg, let me check for you for the subscription how much it is.
2 years is the equivalent.
It's best if I show you because I don't want to talk things that I'm not like. If you're a trader, you gotta be able to subscribe, man. It's actually saying $34. Let me see how much it is. I'm just plugging you guys. Understand? These things help a lot. It's 600. I'm getting on jail. I pay 600 for this nonsense here. There is it. You see. If maybe you thought I was bluffing, there is it. You see, it's been paying 600 all along. 6 clip. You get the point. So it's 600 guys for the subscription, and then a person comes in and says it's behind. I don't know which nyaupa are you smoking. Maybe your nyaupa is behind, but there is it, guys. Hey, me, I said sell, guys. Me, I said sell. We're not, all of us are not gonna see the market the same, understand? Some will see this, some will see that. And you have to trust your own direction. Me, I trust my own direction, understand? Me, I trust my own direction. My own direction said it's a sell. I'm gonna take the sell. Understand? Like, it's a matter of you trusting your own direction. Just like sometimes, it matters in the market to trust your own direction, and people, they don't really understand it. Understand? It's a must for you to trust your own direction. Me, I trust my own direction. That's all. Like, actually, that's what it's killing most of you guys now. You don't trust your own direction. You wanna trust Ninja's direction, this one, that. But what about your direction? What do you see?
Put your hand up for the
Understand? It's a must for you to start to trust the direction of yourself. You understand? Even if I say buy, if you see a sell, enter sell. Even if I say sell, if you see sell, buy. Understand? So it's how it is. Understand? You have to trust what you see. Me, that's what I see. Understand? That's what I see. If the dollar is weak, where shall we say? Shall we USD? Where is USD at? It's on the. It's on the right. What does the right favor? I can't teach you everything. Let me keep quiet. We'll see, bro. Like, the market is unpredictable. Me, I'm already on profit. We entered the sell. We're still moving. We relax. Understand? Sells, guys. Me, I'm telling you now. Sell. In God we trust. In God we trust.
One of the key data points that we get this week. Emery Verdern, Danny Berger, Annalisa Abramo.
You guys are saying news this week.
He'll be returning on Monday.
You have to trust your own strategy and trust yourself. Nobody's a market maker here.
People are saying, Danny, I think
Understand?
this is really the key question.
No one is a market maker here.
Is the bond market overpricing how much work the Federal Reserve has
Me,
to do to keep
I'm going to enter what I see.
And I'm really interested,
and I'm not forcing anybody to enter what I see. There are great people than me that can get the direction. You can go for them.
in this rally in this bond market. And does that make sense? If inflation is coming in, it
core
doesn't mean
CPI is
recession. And the bond market is
0.2,
screaming,
0.1.
maybe
What
not
the fuck
screaming,
is going
loudly
on there?
saying recession at this point. JP Morgan says the market's pricing in 30% odds of a recession. Is that in line with reality, regardless of what CPI does today?
And one thing that's been hard for, I think, all of us to square, and I think, Emery, you've done a great job of bringing this out with pretty much every consumer conversation that we've had. Is it sustainable to see the higher end, wealthier individuals continuing to do just fine and be able to travel and spend, or the lower income classes are increasingly having difficulty in pushing back?
But guys, I'm not changing my fate.
Well, you see this in the polls, right? Inflation is the #1 issue going to election. This is the first of 3 CPIs we're going to get before November 5th. But when you hear from corporate earnings, Mohammed Al-Arian always said, listen to what corporations are saying. What are the CEOs saying? They're saying that they're still seeing that resilience on the upper end. The resilience is really starting to crack on the lower end. And I think that's why this CPI is really important.
Although maybe not enough to bring down inflation, which is sort of the key metric as we look forward to this. At a time when we already have seen a pretty big move, let's take a look at some of these moves. In the 2-year yield, we have seen 30 basis points of decline since the end of July. We have seen a 4-day winning streak on the S&P 500 that has been the biggest going back to November. We have seen some of the biggest tech names deliver incredible performances. I'm thinking, for example, of NVIDIA with a 17% gain in the past week alone. This has been the other sort of existential angst, Danny, which is how much are we right back to where we began before that sort of volatility really got kicked off?
Well, the volatility is also just kind of the point, even though we're back to where we were. And you can see that clear shift in the markets from all calm, from every day kind of inching up to a new record. That stopped last month when we got the CPI report. The CPI report was that threw everything kind of into the wind, where you get a big, powerful small cap rally that undoes itself. You get 2-year yields going from 4.5% to under 4%. So it was a change in this market as we try to grasp onto trends. And as we try to do that, there's just this incredible chop. So does today help us find the direction? Does today help us? Or maybe it's just tomorrow, Lisa. Maybe it's just retail sales and a jobless claims print that we really should be caring about.
Or maybe we just won't get direction for a while, which is the unfortunate reality that we've been in for quite some number of months. Coming up this hour, I'm so pleased to say we've got Gargi Chowdhury of BlackRock as markets do hold steady ahead of that CPI print. Steve Rasciuto of Mizuho on why he thinks the U.S. economy is still healthy. And David Kelly of JP Morgan on why the Fed's 2% inflation target is within reach. I love having them together because they kind of oppose each other with respect to where we are in this recovery story. We begin with our top story. CPI out in just under 30 minutes. The S&P 500 notching a 4-day winning streak as traders anticipate another soft data print on the back of PPI. Gargi Chowdhury of BlackRock saying this: the risk to the market remains hotter than expected inflation data and weak retail sales that would put the Federal Reserve in a bind. While growth risks have increased, we believe the market has overreacted to a small number of soft data points, not a drastic change to the macro outlook. Gargi joins us now. And Gargi, I want to dig into that a little bit. Where is the biggest overreaction right now in markets?
Good morning. It's so great to be here. Thank you for having me.
So yeah, guys, me I give you guys my direction. You guys will see which one you enter.
Was certainly in the massive repricing.
Don't forget, guys, me I trade with space markets.
With the warp screen pricing in all of those 50 basis point cuts, which
and I'm still on profit, guys. We got like 30K profit.
Before that, we had heard from a very resolute
30K profit
that they're going to be dependent on the totality of the data.
But technically, fundamentally confirmed for me. So
the moves, that's great.
me,
As you
I'm
know,
dropping.
we've liked fixed income for a while. Even with us having liked fixed income in the belly of the curve as much as we did, it felt like too much was
I'm
getting
dropping,
priced
guys.
in terms of, Danny, as you were saying earlier, the market screaming recession risks. And frankly, when have we ever cared that
What's the
much
direction,
about the
boss?
ISM number, right?
Guys,
So
first
I
thing
think
first,
there
you
was
have
a
to
bit of
trust your
overreaction,
strategy,
and
man,
thankfully
and
we
trust
have
your
unwound.
setup.
So now
My strategy is simple. It says sell USD, sell Nasdaq, sell gold. You have your choice to take whatever direction you wish in your heart. Me ain't changing the direction. I'm not a seller, but today I'm selling.
And I think that's what's
So let me visit the sell near and feel how it
What's the
is.
risk today to markets, considering how people are positioned, that we get an upside surprise or a downside surprise to inflation?
The bigger risk, I guess it depends on how you're thinking about bigger risks, but I suppose for the equity markets, if we get a very shocking high 0.3 print, and God forbid a 0.4. Again, that is obviously not the expectation across the street. Everyone's expecting sort of a softish 0.2, but it will be meaningful.
Yeah, like as much as I said, everybody trusts his own direction.
The equity markets and bond
Yeah,
markets, and then if we
I don't
follow
blame
that
anybody.
with the retail sales, that's a little bit cooler than expected, and the market's already expecting a cooler than expected retail sales. But if it's
Understand.
even
See you guys on the
bigger
other
than
side.
what